Hey
Got it.
everybody, it's Damian Wise and Kevin Teel here for Wise Tips for Wednesday. I'm your host, Damian Wise, as always, the team leader of the Wise team at Keller Williams. And today we're going to talk with Kevin. Kevin's going to give us a market update on interest rates right now. They are up and down all the time right now. But we also want to talk about how buyers are handling this and maybe some other programs that we can utilize to get people qualified to get into homes and save you some money if possible. Kevin, take it away, buddy. What do we got?
Well, it was an interesting week last week. Things went up a little bit, but that's still okay. We're hovering right around 5.75. Tomorrow's the big day when the Fed meets, and we'll see what happens. Usually, if they make a huge jump, sometimes interest rates will fall that day and a few days afterwards. So I'm hoping that this is going to be a good week for rates. Hopefully, they're going to come down, a few eighths of a point and get things a little bit better. So we're kind of holding on at the moment, but still 5.75 is not too terrible these days. So we'll see what happens tomorrow. You were asking me about some programs, and I just did a program yesterday I wanted to tell you about. I had a girl come to me who buying about a $300,000 house, and she said, I really want to put down 20%. So I said, fine, let's work it out at 20%. It turns out, Damian, if she would only put down 19% and pay mortgage insurance for about 24 months to the tune of about $10 a month, because it was a very low priced house, she could actually take her interest rate from 5.75% all the way down to 5.375%, only by putting down 19% instead of 20%. Doesn't make very much sense, but monetarily, it made a difference of $60 a month to her. And so it really relieved the stress on some of her finances for buying her first time house. So it was a fun thing for me to run the numbers, look at it both ways and say, here's the best thing for your bottom line. Let's not put down the 20%, save $5,000 and actually end up saving $60 a month for her mortgage. So it was a fun thing for me to help her work out being a first time home buyer. So things like that.
Crazy.
It's crazy.
Yeah.
It makes no sense, but that's the program that we put her in. Yes, sir.
All right. So what about, I hear a lot about USDA.
Yes.
In some areas, USDA is pretty good.
Yep.
Is that still a good deal for buyers?
It is if it fits what they want, where they want to be, and what they want to do. USDA requires zero down payment, kind of like a VA loan. USDA has mortgage insurance, but it is about 60% less than it would be for an FHA purchase. So huge savings to the tune of $100 or $200 a month for your mortgage insurance. It requires a 640 minimum score. There is a maximum back-end debt-to-income ratio percentage of 41%, which is a little bit low. However, if you have the income and you're buying the right priced house, it's a program that can fit for people who want to be out there in a rural area. It works very well. There are income limits based on the number of people in the house. So if it's a single person buying a house, your income limit is going to be rather low. If you've got a husband and a wife and 2 kids, or a total of, say, 5 people in the house, those income limits go up based on the number of people in the house. So yeah, we are doing an increasing amount of USDA loans these days because people want to get out of the city. And so it's a great I love the program. It can work for a lot of individuals. Other than that, there is still a Fannie Mae first-time homebuyer program that has lowered mortgage insurance, lowered interest rates, and now they actually raised the income limits for the Fannie and Freddie program. The income limit for Boulder County used to be about $80,000-ish. It has gone all the way up to right about $100,000. So it really opens up that loan program to people who make a little bit more money, but are still first-time home buyers and have just a small amount of money to put down. Lowered mortgage insurance, 680 minimum credit score, and they can still go to 50%. So 2 really strong programs to help first-time home buyers. And as you know, those are my favorites.
Oh, yeah.
So
what kind of conventional products are out there right now? Is there anything?
You
superior?
know, conventional is conventional. I mean, the good thing about it is you can still go up to 50% debt to income ratio. You know, what I am doing a lot of is I'm seeing parents wanting to buy houses for their kids, or parents buying houses for their parents, which is great because the parent can be a non-occupying co-borrower for a single family residence for the kid. So now the kid is a homeowner and the parents can be co-signers, but since they're non-occupying co-borrowers, you get primary housing rates, which means they're not buying it as a second house or an investment. So they get the straight up 5.75% instead of it being 7%, just by being non-occupying co-borrowers. So I'm actually working on, it's a phenomenal program. I'm working on one of the parents for the kids right now. And also the parents are buying his mother a house down in Castle Rock. So that has started to come up with a little more frequency, better rates, great program, and it helps everybody out.
Very cool. Very
yeah, it's
good
very
stuff.
good. Yeah, fun program to use, helps everybody. Yeah, love it.
And then, you know, the last but not least that I'm familiar with is the VA programs, which has got to be one of the best deals going. Those veterans deserve it.
It is definitely one of the best deals going. I love VA for a number of reasons. Number one, very low credit score, 620. Some people even go to 600. It is 0% down. The rates are typically, I'm going to say today, as of right now, I'm going to say rates are typically about a full point lower than what they are on conventional, which is phenomenal. And also, loan limits for VA products have been increased drastically, meaning you can virtually buy anything on a VA loan and not be hampered by loan amounts or jumbo loan amounts. That recently changed to probably a couple of weeks ago. If I say it a month ago, I'm probably wrong, but recently changed. So loan limits greatly increased for VA purchasers. They're fast, they're quick, they're easy. It's my favorite thing to do, and we get to help out people who you know, made a sacrifice for all of us. So those are my favorites. Those are my favorites.
Awesome stuff, man. And how are people going to get a hold of you? Because you can do all of those loans, right?
I can do all those loans.
You can do all those loans. You're a one-stop shop.
A one-stop shop. That's right. That's right. I've done every one of them except for a VA this year so far. I'm pretty easy to get a hold of, man. You can search up Kevin Teel Mortgage on the internet. You can call me. My phone number is 303-709-3328. You can also text me at that number. The website is www.kevinteelmortgage.com. Pretty easy.
That's pretty easy. Absolutely. Yeah. Well, again, thank you, Kevin, for being with us today. This fantastic Wednesday, and we'll check in with you again next month. What do you say?
That sounds great to me, brother. We got to go play golf.
I don't know. I'm so busy. I don't know if I can take time away, but you're right.
Well, I understand. Let's plan it a month out. That gives us a little bit of room.
That sounds good. All right, buddy. Have a great day.
All right, you too. Thanks, man.
Bye.